If you have a tenant in your property and you still have a homeowner's policy on it, you may be one claim away from finding out the hard way that you were never properly insured. Homeowners insurance is designed for homes you live in. The moment you move out and a tenant moves in, the risk profile of that property changes. And most homeowners policies are written and priced for owner occupied homes. If the property becomes tenant occupied and the carrier wasn't told, a claim can be denied. This is one of the most common mistakes new landlords make. They buy a property, get a homeowner's policy, rent it out, and assume they're covered. They're not, and they usually don't find out until a tenant causes damage or someone gets hurt on the property and the carrier says this isn't what the policy was designed for. I run an independent insurance agency. We write homeowners, landlord, commercial, and umbrella policies, and the gap between what homeowners insurance covers and what landlords actually need is something we deal with constantly. So let's walk through what landlord insurance actually is, what it covers that your homeowner's policy doesn't, what it costs, and when you need to make the switch. A homeowner's policy, specifically an HO3, is designed for owner-occupied properties. It assumes you live in the home, you're maintaining it, and the people inside are your family or your guests. The underwriting, the pricing, and the coverage are all built around that assumption. When you rent the property to a tenant, that assumption breaks. The carrier didn't price the policy for tenant occupancy. They didn't account for the wear and tear that comes with someone else living in your property. They didn't account for the liability exposure that comes with a tenant and their guests coming and going. If you have a homeowner's policy on a property that's being rented out and you file a claim, the carrier can deny it. The property wasn't owner occupied. The policy terms weren't met and the claim isn't covered. We've seen it happen at our agency. I'll tell you a story about that in a minute. If you're renting out a property, you need a landlord policy, sometimes called a dwelling fire policy or a DP3. It's specifically designed for properties you own but don't live in. A landlord policy covers many of the same things as a homeowner's policy, but here's where it's different and where it protects you in ways a homeowner's policy simply can't. Dwelling coverage. This protects the structure itself: fire, wind, hail, lightning, vandalism. If the building is damaged by a covered event, the policy pays to repair or rebuild it. This works the same way as homeowners insurance. The structure is covered against named perils or open perils, depending on the policy form. Other structures: detached garages, fences, sheds, storage buildings. If your rental property has separate structures on the lot, the landlord policy covers those too. Liability coverage. This is critical for landlords. If a tenant or a visitor is injured on your property and you're found liable, your landlord policy covers legal defense costs, medical bills, and any settlement or judgment. Someone slips on an icy walkway you didn't maintain, a porch railing gives out, a child falls through a rotted deck board. Those are liability claims against you as the property owner. Loss of rental income. This is one of the biggest differences between a homeowner's policy and a landlord policy. If your rental property is damaged by a covered event and the tenant can't live there while it's being repaired, you lose rent. A landlord policy can reimburse you for that lost rental income during the repair period. A homeowner's policy has loss of use coverage, but that pays for your living expenses if you have to move out of your own home. It doesn't cover lost rent. Those are two completely different coverages solving two completely different problems. Landlord personal property. A landlord policy can cover property you own that's kept at the rental for the tenant's use. Appliances you provided, lawn equipment, tools for property maintenance. It does not cover the tenant's belongings. That's what renter's insurance is for. There are some important things a landlord policy won't cover, and knowing these gaps matters. Tenant belongings. Your landlord policy does not cover your tenant's furniture, clothing, electronics, or personal property. If there's a fire and the tenant loses everything, that's on them unless they have renter's insurance. This is exactly why you should require every tenant to carry renter's insurance. I made a video on that and I'll link it. Intentional tenant damage. Some policies cover tenant caused damage, but many standard landlord policies exclude it or limit it. If a tenant trashes the unit on the way out, punches holes in the walls, destroys appliances, your landlord policy may not cover that. Check with your agent on how your specific carrier handles malicious or intentional damage by a tenant. Flood and earthquake. Just like homeowners insurance, a standard landlord policy does not cover flood or earthquake damage. If your rental property is in a flood zone or in an earthquake prone area, you need separate policies for those. I've covered flood zones and earthquake coverage in separate videos. Vacancy. If your rental property sits vacant for an extended period, typically 30 to 60 days depending on the carrier, your landlord policy may restrict coverage or exclude certain perils like vandalism. Insurance carriers consider vacant properties a higher risk for vandalism, water damage, and other losses. If you're between tenants for an extended period, you may need a vacant property endorsement or a separate vacant property policy. These are significantly more expensive, but without one, you could have a gap during the vacancy period. Landlord insurance typically costs about 15 to 25% more than a homeowner's policy on the same property. The extra cost reflects the additional risk that comes with tenant occupancy, higher claim frequency, loss of rental income coverage, and the liability exposure from people you don't control living in and visiting your property. The exact cost depends on the property's location, age, condition, rebuild cost, and what coverages you select. But as a general rule, if you're paying $2,000 a year for a homeowner's policy on a property, expect to pay somewhere between $2,300 and $2,500 for a landlord policy with similar coverage. The cost difference is real, but it's not dramatic. On a property that generates $2,000 to $3,000 a month in rent, the difference between a homeowner's policy and a landlord policy is often less than the cost of one missed rental payment. And when you consider what you're protecting, an income producing asset that could be generating rent for years or decades, the extra cost is one of the easiest line items in your budget to justify. So how do you know when to make the switch? The answer is simple. The moment you know the property will be tenant occupied, switch the policy before the tenant moves in, not after. If you're buying a property specifically as an investment, bind the landlord policy from day one. Don't start with a homeowner's policy and plan to switch later. Start with the right policy. If you currently live in a property and you're moving out and renting it, call your agent before you leave. Let them know the occupancy is changing. They'll convert the homeowner's policy to a landlord policy or write a new one. If you wait until after the tenant is already in the property, you're operating without proper coverage during the gap. And if you're renting out your property on Airbnb or another short-term rental platform, a standard landlord policy may not be enough. Short-term rentals with frequent guest turnover are often classified as commercial activity. You may need a commercial policy or a specific short-term rental endorsement. Talk to your agent about what your carrier requires. Some people ask whether they can just keep the homeowner's policy and not mention the tenant. The answer is no, and I already told you what happens when you try. We asked a policyholder directly whether they had tenants. They told us no. When the home burned down, the carrier found out tenants were living there. The claim was denied. The homeowner's policy didn't apply because the property wasn't owner occupied. That's not a scare tactic. That's what happens when the policy doesn't match the reality of the property. Your carrier underwrote and priced your policy based on the information you gave them. If that information is wrong, they're not obligated to pay a claim, and they won't. Be honest with your agent. If you have a tenant, say so. If you're thinking about renting the property, say so before you do it. The cost of a landlord policy is always less than the cost of a big denied claim. If you own your rental property in an LLC, the entity issue I covered in my entities video applies directly here. The named insured on your landlord policy has to match the legal owner of the property. If the LLC owns it, the policy needs to reflect that. And not every carrier will write a landlord policy with an LLC as the named insured on personal lines. Your umbrella policy also needs to align. A personal umbrella may not extend to cover claims against an LLC held rental. If you have rental properties in both your personal name and in an LLC, make sure your agent understands the full picture so there's no gap between what's covered and what's not. I covered all of this in detail in my entities video. If you own rentals or LLCs or trusts, go watch that one. This deserves its own mention. Every lease should require the tenant to carry renter's insurance with you listed as an additional interest, not additional insured, additional interest. That way you get notified if the tenant cancels or lapses their policy. Why does this matter? Because if a tenant causes damage to your property and they have renter's insurance, their liability coverage can pay for the damage to your building. That means the claim goes against their policy, not yours. No claim on your landlord policy, no deductible, no premium increase at renewal. If the tenant doesn't have renter's insurance, that same loss hits your landlord policy. You pay the deductible, your premium goes up, and you're the one dealing with the claims process. Requiring renter's insurance is one of the simplest and most effective risk management tools a landlord has. I made a full video on this and I'll link it. If you own a rental property, you need landlord insurance. A homeowner's policy is not designed for tenant-occupied properties, and your carrier can deny a claim if the property isn't owner-occupied. Landlord insurance covers the structure, your liability, lost rental income, and your property at the rental. It does not cover the tenant's belongings, flood, earthquake, or vacancy without additional coverage. It costs about 15 to 25% more than homeowners insurance, and the extra cost is worth it for the protection it provides. Switch to a landlord policy before the tenant moves in. Make sure the named insured matches the legal owner. Make sure your umbrella covers the property, and require renter's insurance from every tenant. Insurance only works when the policy matches reality, and with rental property, that detail matters more than most people realize. If you own a rental property in Nevada, Utah, Arizona, or California, and you're not sure whether your policy is set up correctly for a tenant-occupied property, we can help. We work with multiple carriers across personal and commercial lines, and we'll make sure your landlord policy, your entity structure, and your umbrella all line up the way they should. There's a link below to get a quote or just give us a call. Check out our Google reviews to see what our clients have to say. And if you want to understand how your entity structure affects your insurance, I made a video on that. It's right here. Thanks for watching.